Hello everybody, welcome back. So we're going to look at some traditional markets, currencies, commodities, energy, stocks, the lot. I know it sounds boring, but it's it's what we like here. We like to be bored out of our minds on a Monday morning. So let's think about what we're seeing here. This is Dxy doing its giant tear up in its rising channel, which I know is a bearish formation, but we all know the reasons why that we're moving up like this is because of our friends over in Europe and my mates in the UK as well, who are deciding not to be as aggressive because they can't really. They got their hands tied. They can't be as aggressive when raising rates like America can. America is an extremely strong country despite what people might think. They can afford to do this sort of thing. And they continue to do it at a faster rate. Obviously, by geographical stance, when you've got things going on in Russia and Ukraine, obviously that impacts the Europeans more than Americans too, who are somewhat insulated from that event. So there's reasons for the euro and the pound to continue to go down, and as they go down, it forces the Dxy up, because basically the Dxy is just it's like a competition, isn't it? Who's better? Who's worse? And then it's reflected on the Dxy, which is the dollar strength versus all the other currencies. It's kind of that simple. But if we do think about what we see on a TA perspective, we've got a giant falling wedge with a rising channel coming out of it. So we've broken out of this, and I've alluded to the fact that this could happen, especially with the short signals on the monthly for the pound and the euro, which continue to play out quite nicely. We think about the breakout zone, we go up to a new all-time high for the Dxy over time. Remember, this is a monthly, right? But we think also about what's happened since this year, and I know that last year I called that this is going to be a bullish year for the dollar without even looking at any of this sort of stuff, to be honest with you. It was pretty obvious just on a momentum basis that this was going to be a bullish year. I didn't expect it to be quite so bullish, but it is what it is. Bullishness is bullishness. The trend is your friend until the end of the trend, or should we say that the trend of the Dxy is actually a bit of an enemy to everybody else. We are approaching this toppy kind of area here, which is about 114, 113, give or take. We've had this highlighted on the chart for a little while. It's not a specifically amazing area to kind of mark off on a horizontal basis, but if we did it this month or next month, so be it. It's still going to be around that 114 kind of area. We marked that off here. We can see that there was a sizable rejection back in the 80s, before I was even born, man. Before I was even born, with a bit of a straggly area over here. So on a horizontal basis, it's not makes too much sense. But yeah, it seems reasonable to imagine that we will continue to go up. And again, I'm more interested in looking at the Dxy versus its, euro friend or euro enemy, and say that, well, this is a short signal on a monthly that's continuing to play out. The pound has not long ago created one of these, so it looks like the pound is on its way to continue down below $1 as well over the coming, let's say over the next 12 months or so. So that's only going to continue with the dollar strength. The only thing that's going to stop all this would be a change in geopolitical events and monetary policy for the ECB and the Bank of England, and obviously the dollar as well, if they start to be a bit more, timid or dovish, as they officially call it. So it's not looking particularly good for other currencies, and it still looks good for the dollar. So we'll see what happens when we approach 113, 114. Now, with all of this in mind, the Nasdaq still, this is not a proper Nasdaq, this is like almost not even a pre-market, but we can see that the Nasdaq's basically undecided and going down. This makes more sense when we look at it with the normal Nasdaq, and we see that we're back inside this giant descending triangle, and we're below all major moving averages here on the daily. How are we looking on the weekly? We are probably going to come back down to our 200 exponential, where we found ourselves a bottomy kind of area before, where we launched back up to the top of the range. So further downside is most likely required for Nasdaq, and that makes perfect sense when we think about the Dxy continuing to rise. Dxy has an impact on everything, and it's even had an impact on oil. Now, I've been trying to long oil for a little while here. This is oil on the daily. Tried to long it from this level here, stops out, this level here, stopped out, this level here again. Like, this will succeed. Oil is pretty much designed to go back up at this stage right now. These areas down here between 85 and 86 for me are it's a risk worth taking. because if we get stopped out, it's no big deal. It can have a very tight stop loss because below 85 would likely bring it back down to 75. So you don't want to be holding on to a long position if you get stopped out at all. So it's quite an easy position to make, because if it works, it works, and if it doesn't, it gets stopped out quite easily and quite quickly with minimal losses. So I will succeed in this oil long. I will do it. But for the moment, it's been a bit testing. But I'll be looking for this to, first of all, move back up to around 90. But we'll have to check now because it was based on weekly moving averages. It would be the 21 exponential. Okay, so we're talking 97.4. That 21 exponential, which is just lower than last week's candle. Once that breaks, or if it breaks, should we say, we move up to 104. So I've been saying it all this time. It's no different. Everything still applies. And the main thing that's kept this down, in my opinion, is the Dxy. So a strong dollar is impacting oil, but oil it seems pretty obvious, especially with the general vibe on energy is that it's going to go up again throughout this next quarter. So the fourth quarter should be bullish for the dollar. For oil and energy through default, you know. But we'll wait and see, like I say, and if it breaks down, no big deal. 75 will be the next time I'll be trying to do this as well, backed up by a 100 simple moving average. And the last thing I was going to bring to your attention is gold. Now, I know gold is a bit of an enemy of crypto because you're like, oh, you're either on one team or the other. But there is opportunity on gold, I think. Now, I've been watching this a little bit, and I was thinking it was going to break down a little lower, and it could. But there could be an opportunity for gold approaching, if not already. So we'll start on the monthly. We've got our 50 exponential moving average here around 1672. That's fine. If we manage to get down to that level, that would be an opportunity for a long with a tight stop loss. Tight stop loss around 1642. Fair play. As far as this trend is concerned on the monthly, it's a bullish trend. There's nothing to say otherwise. It's a bullish trend. We might have broken down on these shorter term timeframes, but it's still a bullish trend. We move it to a weekly. What do we see? We're backed up again from a 200 exponential and a 200 simple, all moving around in this area. So between basically 1690 and 1674. So again, you know, relatively tight stop losses would be required around this level, because if we break down from here, it does get particularly nasty. But you know, while we approach major supports that are all sort of, you know, there's a lot of confluence around these zones, around these areas. Why not give it a go? I'm talking to myself, not you. You make your own decisions. I don't make your decisions for you. But this is the way I'm thinking, and I'll be monitoring gold as if and when we approach into these zones and see what kind of reaction we get. Because if it is, that could be an opportunity for a long that takes us up to a new all-time high. But well, I suppose, yeah, it would be, I suppose, probably a new all-time high over a longer period. This isn't crypto, by the way. This is gold. This is gold, so don't get too excited. But on the daily, it's not quite as bullish on this one on the daily, so we're below all major moving averages. So this is the only thing that I was thinking about. You know, maybe we do break down lower. This is why I want to see the reactions on those longer term time frame moving averages, like the 200 simple, 200 exponential, 50 exponential on the monthly or whatever. I want to see the reactions around there, because as far as the daily is concerned, it is below all major moving averages and horizontals and descending triangles. So a lot of it is, you know, looking, I suppose, like it could break down further. But based on a daily, I prefer larger moving averages on larger term time frames, and the trend as far as they're concerned is still up. But it doesn't mean that those things can't break. Obviously, supports break at some point, resistances break at some point, trends change. So we'll see where we're going. I'm not gonna go crazy on gold, but I have been thinking about it recently as we approach these lows. And if we think about what we see, we just get rid of all this noise. It's not relevant anymore. I've got rid of my my magic indicator there, so we'll just get rid of these for a second. Got to keep the magic indicators up. If we do think about what we're looking at here, there is a lot of support around this level also. Recently, over this year, and last year actually, this is a daily, it's going all the way back into 2021. So we see bottom, and we're trying to approach it again. So there is a lot of reasons why we might think that gold is approaching a significant low that could then go on to a new all-time high. But it's up to you whether you try and take the opportunity. Again, I'm not your financial advisor. I'm not your dad. I'm just a bloke on the internet suggesting things to you, because these are the trades that I've got my eye on. But there are obviously reasons why you might not want to do this, because for the most part you'd be using leverage, wouldn't you, if you're going to be doing gold, unless you would go down to your jewelers and buy some chains, whatever. You're more or less going to have to be forced onto some kind of platform and use, you know, a derivative of oil, a derivative of these precious metals. So it's up to you what you do, but whatever you do, make sure there's tight stop losses involved, because there's a reason for a tight stop loss for both gold and oil. It's because we are basically at supports across the board. So if it doesn't work out and it continues to go the wrong way, you would know about it, and you don't need to hold on, because if it breaks down, if oil breaks down from where it is and gold breaks down from where it is, it goes down significantly lower than where it is right now. So a tight stop loss will be your best friend. Anyway, I'm going to leave with you there. Nice and boring commodity click here for you, currency click. I know it's not the usual, but it's sometimes worth thinking about. Anyway, I'm going to leave with you there. Thanks for watching. Hope you have a nice day, and take it easy.